QuickBooks Enterprise 2021. 2 businesses and personal bookkeeping in one QuickBooks file using classes. Revenue using a cash method and classes. Get ready because it's time to boldly account where no accountant has accounted before using QuickBooks Enterprise 2021. Here we are in our practice file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we set up our account, we set up our chart of accounts, added account numbers, and we turned on the class tracking. The way to turn on the class tracking is to go to the edit dropdown, to the preferences at the bottom, accounting on the left-hand side, company preferences on the right-hand side. We turned on the classes by hitting the classes here, and then we set the default setting as the accounts to be the default setting to help us to assign the classes out. Now, you will not have this default setting if you're using something other than Enterprise, for example, QuickBooks Pro, and that's okay. We'll just kind of point those times out when there's those differences as we go when we can. We also turned on the account numbers so that we can see the account numbers, and we're going to use that to allocate our accounts as well. I'm going to say save and close now. So then in the chart of accounts, if we take a look at our lists and our chart of accounts, we then set up our accounts down here, mainly focusing in on our income statement, our expense accounts down here, and breaking them out by account number. So we have them kind of in a vertical breakout of the 6s for business ones, the 7s, 2 and 8 for personal. Then we're going to do a similar kind of function for the sales item now. So sales, you can see that the sales are in the 4 category, and this one is 47. So why don't we make a sales that are going to be in the 400s, and we'll make them one in the early 400s and the second one in the later 400s. So let's make this edit this item, and I'm going to make this one sales, and I'm going to say the first sales items, I'm going to make them in 4-1, and let's say 100, and that's going to be for B1, or in the 4-1 area, and I'm going to assign this one to B1, and so I'm going to save and close. And then I'm going to say 4-2s are going to be for the second business. I'm going to say edit, new, and then I'm going to say I want to have a sales item or income. Let's call it income type of account. And we're going to say this is 42100. And this is going to be this sales again. And you might say, we could say B2 in the name since we have a lot of room here. And then I'm going to assign this to the second one and say, okay, so there's that. And then maybe 4-3 will be personal. So I could say personal income, edit, new, and then I might say that we want an income line item and continue. And we could then call this personal income. So I might call this revenue, something other than sales for the personal. And I'll make this the personal up top. And we'll say, okay, there is that. And then let's save it and close it. So now we've got our revenue broken out. Let's edit that one again. And let's make that 4310. 4310. 0. And then say save it. Okay, so now we've got our revenue accounts lined up that we can be entering into. Sales B1. Let's put a B1 on this one. Edit account sales B1. We'll call it B1. All right, save it and close it. Now, if I go to the home page, we're first looking down here in the customers section. So the customers section, this is going to be like the income cycle, eventually resulting in cash, hopefully, that's going into our checking account. There's a couple of different ways we can think about this, and you can think about it as basically a cash basis method or an accrual basis method. And I'm not thinking about a cash basis or accrual basis just as though we choose one or the other. It's going to kind of depend on the type of industry we're in oftentimes. In other words, if I'm in the type of industry, such as an accounting firm or something like that, where I have to invoice people after the work is done, and then they're going to pay me later, I'm on an accrual basis system because I got to invoice them and then receive the payment later. So I'm going to have to go through this full process, which means I'm going to have a transaction that won't be cash related and track the accounts receivable within the system. However, if I'm in another type of industry where basically like gig work or something like that, I work online and I get paid from people like that, or I work in a restaurant and I get paid at the same point in time that I do the work, then we can use a create sales receipt, which is more of a cash basis method, or we could try to construct our financial statements directly from what has cleared the bank. And we could do that either with the use of bank feeds, feeding the information directly from the bank into our system, where we would then take it in our system and try to allocate it. In that system, we would be on a cash basis, not only on a cash basis, but also dependent on the bank. We're basically constructing our information from the bank. The bank is obviously a cash basis information, but it's also information that has not just been paid in cash, it's cleared the bank at that point in time. So let's first think about that situation. Let's think about a situation where we're basically constructing our books from the bank. It would be same if we're using the bank feeds to do this, but we're imagining we have the bank statement and everything that's a deposit, we're going to put in our system. And we're going to put it in our system and have to determine, well, it's a deposit. Well, one of a few things happened. If it's a deposit, either it came from a customer and should be sales, or and then I have to decide which business it came from. So I need to allocate it to the business, or it came from someone else, a personal source, which would either be personal income or some other reason we got the deposit, like a loan or something like that. But the general rule is that any deposit that's going to come into our checking account is going to be from a customer, and we can record it as revenue. What we will have to then determine then is the deposit going into which business is it going to be going into? And so let's think about that. We're going to say, okay, let's go to the lists up top. We're going to take a look at the chart of accounts, and I'm going to imagine we're entering the deposit straight from the bank statement into the checking account here. So here's our checking account. We're thinking about the deposit side of things. Now, first of all, let's close this out real quick. If first you would like to have 2 checking accounts or 3 checking accounts, one for each business. That would be the best way to do it. We're going to imagine we're not doing that. We have 1 checking account and then go and pick the information up from there. If you have 1 checking account, we have to determine then when we get the money into the business, we need some way to determine, is this money going to business 1, business 2, or is it personal? So we can determine by the fact that it is a deposit that it should be revenue. Revenue's going up, but we have to then think about, well, where did it come from? And if you're getting the deposit like in gig work, and you're getting it, it's going through PayPal or something like that, then it'll be fairly clear to see that. Or even if you're taking a deposit from direct payments into your bank account using some kind of electronic feeds, then the feeds will typically be able to tell you that who the money came from, and you can distinguish them out. If, however, you're just putting cash into the bank account, you're not going to have any added detail of where that cash came from, which business did it come from, and you're going to have to basically allocate that out when you put the cash in the business. So you have to use a different kind of method. So I'm going to say, all right, let's say this happened 01/15/21. We're going to be working in 2021. So January 1st, 2021, I would mark the deposits with like a DEP instead of some kind of check number. And let's say just we had a deposit for like 10,000. Now we'll assign the deposit to an account. Now to make the automatic allocation work, you got to hit the splits button down here so you can see this drop down and you can see the class field, so it'll fill out automatically. So I'm going to say that we want the income account now for B1, and then it'll populate the class for us automatically. So this is going to be then increasing the cash account, and then it's going to go on the income statement for revenue, increasing then the column of B1, business 1. So I'm going to say save it and close it. Let's check it out by going to the reports dropdown, company and financial, and take a look at that profit and loss by class, changing the dates up top from 01/01/21 to 12/31/21, and there we have it in B1. Now, if I go back to the checking account, notice if I don't hit this dropdown on the splits, it won't assign the class because it can't see the class when you enter it. So in other words, if I did this again on 01/17/21, let's say we had a deposit, and then I'm going to say this is going to go for 15,000, and I'm going to put this once again into the same account, 4110, because that's for B1 sales tab. You would think it should do the same thing, but I don't think it's going to assign the class because it cannot see the class. In other words, if I hit the splits down here, it didn't populate the class because it wasn't open when I entered the field. So if I was to record that, it's not a big deal. I can say, okay, save that. And then when I go back into the profit and loss, it will be in unclassified. And I'm going to go, oh, well, I know that needs to be classified. And I know which class it goes to because I assigned it to the right account number. So I can easily then just double click on it and then drill down on it and say, okay, I just need to take this out of unclassified and put it into B1 because it needs to be in that account. So I'm going to say save it and close it, save it. And there we have it. So now it's going to be classified in B1. So if I go back to the checking account, let's say we had another deposit for B2, it's going to be in B2. And again, we would determine this by who gave us the money. And if it was an electronic transfer, then we would have, the customer information. Also, I should be entering the customer if I have the customer information. So if I have if I have the customer information, I can enter then this is from customer 2, let's say. And then we're going to say quick add. It's going to be a customer. And we'll set that up. And then let's say we've got this was, let's say 25,000. I'm just going to put some relevant numbers up there on the income side of things because I'm not going to record a lot of transactions for income. And so then that's going to be then the sales, and we're looking for B2 now. And then once again, if I didn't assign the category, if I didn't hit the splits button, it didn't automatically assign the category because I didn't have it open when I assigned it. Meaning if I was to assign it while this was open and go back and forth here to here, then it assigns the category. So then I'm going to say save it and close it, save it and close it. And then if I go to the profit and loss, then now we have the income in B2. It's assigned in 2. It gives us that double check now because it's in the proper account for B1 and in the proper column, which makes the statement longer, but it gives us kind of that double check to see that everything's lining up as it should. Back to the checking account, if we do another one, and let's give a customer to these up top. Let's say this was customer 1, and I'll assign a customer up there, and let's say this is customer 4. And then again, if we had the electronic transfers, we would be able to see who gave us the money, and that'll help us to give added information so that we can then run reports by customer to see who paid us. If we don't have that information, we can't do that, of course, right? If I'm just recording the deposits and I don't have the added information on who gave us the money, then we're not going to have that. We could still construct our books, but we don't have the added detail to be able to break down who paid us. We know how much we got paid to make the tax return, but we don't have that added detail. So if we have the customer, we want to add it. Deposit, let's do another one for customer 5, tab, quick add, customer. And then I'm going to say this is for 17,000, and this is going to be for sales. I'll say B2. Once again, I didn't assign the class because I didn't have it open down here, but I'm going to say record it. And it's not a problem because then when I go to my profit and loss, I'll be able to see it in unclassified. I know which account it goes to because I put it to that account. So all I need to do is reassign it by double-clicking on it, and then I'm going to say, yeah, that should go to B2, and then save it and close it, and then yes. And so then that's going into the line item for B2. Let's do another one. Let's say we have on the 20th, we have a deposit, and this is going to be customer 6, tab. It's going to be a customer, and we're going to say this is going to be 9,000, and this is going to be for sales B1. And once again, I didn't record it into a category. I'm going to go back to the profit and loss. There it is. It's in unclassified. I need to classify it, so I'm going to double click on it, and then put this to the class, which is B1 this time. It's going into B1, so I'll save it and close it. Okay, and then we might have income on the personal side, which might be W2 income, which if we go into our accounts here, we would say, let's say at the end of the month, we got W2 income, deposit. Now we might put the name of our employer now. I'm going to say W2 income as the customer, and that we could put the name of wherever we work, and we'd set that up. Quick add, going to make that a customer, and then I'm going to say, let's say 23 on the deposit side, 23,000, and then I'm gonna hit the splits here, and then I'm gonna put this into our revenue account. So revenue here with the 4.3 on the revenue, and that's going to be going to our personal. So personal, record it, yes, and then if I go to the profit and loss, now we have the personal broken out over here. We see this nice little tiered pattern, which makes it a longer statement because we could put it all into one account called revenue and break it out by column, but it gives us that double check. And if I have a problem with it, then I can go back in here and assign it to the proper category. And that's going to be one of the, the benefits of this kind of system. So we'll do a similar process on the expenses side of things, and you'll see a similar tiered process. It'll be a lot longer on the expenses side because there's more expenses typically, but it gives us that double check that we can kind of assign things out. If I go back to the home page, then we've been doing this just as if we could see the deposits. Now, there might be a business, like one business might be gig work, which you're basically working from the bank statement, seeing the deposits coming in from like a PayPal or from, a Stripe account or something like that, and you can easily assign them as you go. And maybe your other business is a business that uses invoices and whatnot, and you can easily tell where that income account goes because you're invoicing the clients for that business. Meaning you might have a bookkeeping service where you're invoicing people using accounts receivable only for one business, and the other business you have gig work, which you can clearly see coming through PayPal or something like that. And that way you can clearly distinguish between the two businesses, and you should be able to pick up two methods, one on a cash basis method, one being building the books from the bank statement, the other on an accrual method, you actually doing the accounts receivable and processing that through the system. And obviously any personal money that you're getting is going to be coming from probably a direct deposit, the owner or the business, and that's going to be clearly seen on the bank statement. Now, you could record that at gross income and then take all the deductions out for taxes and whatnot, but most people probably just record it at the net amount that they're getting in their checking account as W-2 income. That would be increasing that side. And for taxes, you have the W-2. So you don't, that's kind of taken care of for taxes. What you're really getting in income is kind of like the bottom line number that you'll have. But you could break out like your 401k plan and stuff as you record the W-2 information. I'm not going to get into a lot of detail with that now, but you can see how the revenue can be broken out between the three categorizations depending on the type of businesses that we have. So in future presentations, we'll talk about like the invoicing process and recording revenue in that format.